Does it work? So my background, I traded for 20 years in the fixed income market, the futures, and started in the border trade on the Chicago on the floor. Then I moved over to London and worked on the Eurex, traded Boon Bubble and Shets, and in 2014 I stopped. The high frequency traders were just kicking my butt too much. Then I went over into JP Morgan to work with regulations. So I became the vice president to look after the traders of the private banks. I was not a big fan of working in a bank after I've been independent trader for 20 years. Politics and all that was not my favorite. So I got into working with rec technology because of MiFID II was coming out at that point. Started with working with startups, became a mentor in a startup boot camp in London. And then in 2014, when I was still in Chicago, I had a company called LedgerX came to where I was working at, and they wanted to get their paperwork ready for the CFTC. I know they've been in the news lately, but they've been trying to do everything properly in the last 5 years. And even today, they still didn't get the regulation from. So it takes a long time for exchanges to get the regulatory paperwork done correctly. So that's why I was very, blown away, like, all these 500 blockchain exchanges just open up out of nowhere. In the last 3-4 years, I also did ICOs. I did 5-6 decent ICOs out of Slovenia. They're all around. They're not scams. They're all try to make their best out of it. The last one I did was called InsurePal, and not called Watch for Me. They raised 18 million hard cap in under 80 seconds, and we had to return 120 million because the market was hit. So it was ICOs was a crazy times, but I know there were a lot of scammers, but I thought it was a very impressive way to democratize investment into the new projects where, right now, as you can go back now where we at the moment, yesterday Compound raised 25 million from a VC firm, A16. So the VC firms are coming back here because they see an opportunity. So the topic I'm going to talk about, which was, I was advising and I talked to the European Parliament about blockchain for a period now, is when I came across DeFi, that it's only been around for 18 months. So let's put this in perspective where we are in this whole thing. I saw the Dow speech also. It's only been around for 3 years. So these are all just beginning. We are in the beginning of something that could really change how finance been done. So we call it open finance because at the moment, decentralized finance doesn't really hit the nail at the head because the only really thing is decentralized finance is Uniswap. And if you really understand what decentralized finance is, there's when your money is gone, there's nowhere to turn to. So I think it's going to take a little bit of evolution to get to that point that people feel comfortable with it. So there's two kind of decentralized finance. One is centralized finance called CeFi. Hold on. Yeah. So there's decentralized finance and centralized finance. Centralized finance that you give your tokens and key to to them. And one of the major ones is Celsius, which is an app that you can go there and you get fairly high yields. But they control they control your tokens and they'll lend it out to hedge funds and other trading firms to speculate on it. And the decentralized finance are what we're going to be looking around later, who are working towards to become decentralized. But at the moment, there's still humans are involved. So Celsius, which I mentioned, this just came out a couple of days ago. 4 billion that were being registered. So these numbers are incredible. How much lending is going on in there for around the tokens, and why people getting involved in that, and the lending and the borrowing part. And I will come back to this later, but you see the quote that the CEO of the company said, that they gave back 80% of the loan interest rate, and that's where the difference is, because the banks, they get the money from the central banks, and they're taking their cut. So that's why the yields are so low. So if the banks don't cut their cut, then the yields will be a little bit higher what you receive. And that's why the DeFi yields it's one of the main reasons the DeFi yields are higher as you can get that in the banks at the moment. So just to look at the explosiveness of the DeFi space, I took it up for one of the great source of, if you want to follow DeFi Pulse. Yeah, 9,000% since 2018. It's incredible growth in any measures. 2.4 million Ether, which is about $650 million worth locked in. So yesterday, somebody was talking about how Maker is a fake volume, and there's some things that's not right. And by the way, I mean, these are things that you can check, right? So you can go on there, you can check it on the blockchain that these are actually exist. So the growth is, here you go. Now, because the growth is so strong, you see the yield is trending downward. I'll put on the 1 year. If I were to talk to you 2 months ago, the DAI interest rate was about 10%. Now it's about 5%. It's still better than you can get in the bank, but 10% is always sound much better when you can sell it to them. But to be honest, at that point when I told my friends that I can, or some investors that you can get 10%, they're like, are you sure this is not a scam? Because how can you get 10% return when everything else is about 0.51%? And then you have to walk through and they have a little bit of education around how the DAI works. So I was just at the Malaga conference in the Bank of Japan. She put this in there. I took a picture of it because very well, so a lady from Bank of Japan can really emphasize how the central bank and everybody get a little piece of the action before the actual person get the lending out for them. And that's why the yields is always so much lower than in DeFi space, because we cut out the middleman. So this is how how simple the process is. If you look at the Maker DAO, how you get your, how you can able to get a loan. It's simply you put money up, you get a smart contract on the Maker or Compound, whatever you want to use it, then you get a DAI back. And then later on, I explain what else you can do, especially with the new multi-DAI coming out in next week, which I think could be really open up everything in this space. So the question is why the APR is so high, why the yields are so high on this. So here are a couple of things that I took off. It's always market condition as usually the CNBC speech, supply demand. These are often the rates. We can read it. I hope it's not too bad. It always changes. The liquidity is there. The demand is very important, and to make sure that people get to it. So the liquidity provided in the Uniswaps, but that was mentioned earlier, that you mentioned, it's a major part of it because these are pretty much become the bank and backbone of the whole system. So who are the borrowers? Also the question, who's actually borrowing this the other side? Who wants to play around with DAI or whatever they want to borrow against? And there's some very good advantages. Mostly the traders who wants to make money on it, who wants to have quick profit or want to speculate. Those are the first who are getting into the ecosystem. But also no KYC right now, right? So people can come in there, log on to it like I showed you earlier, and you can start trading or borrow, and but is everything tracked 24 hours? Everything is on the blockchain. So everything somebody's trying to mess around with that is can be traced back very quickly. It's also very cheap for the usability, and the crypto loans rate at the moment were still higher. So people are still drawn to it who are interested to get into it. So other questions always comes out, how are you able to stay one-to-one? Because DAI is a stable coin. It's a stable coin that is not attached to fiat. So USDC and Paxo and some other, Tether, that is the only other one that is not attached to the banking system. When you attach to the banking system, then you get your KYC when you have to sign up and you have to get that money. So with Maker DAO, with a DAO is not attached to that. It's free flow, and you not need to do all the legal thing that you need to do the regular one. But it's also not protected if something go wrong. The USDCs are backed by FDIC in America with the Federal Deposit Authority up to $250,000. So you're secured in there. So you can go borrow against that or any of the exchanges, and that money will be secured and get 5% yield on it, which I think is a very attractive proposition if you want to be a little bit more safe and secure on that. So what are the risks? Because that's, in this industry, still there's a lot of risk going on. It's still, like I mentioned to you, it's still some centralization part to it. Then you have a lot of smart contract interacting. Also oracles that to take all the outside data that comes in that put on the smart contract. There's also some, we know earlier this year, one of the tokens got hacked just through their oracle. And it's just a new product. And I have to keep re-emphasizing, it's a very, very new product that you're in, but it's very cutting edge. Very cutting edge. So what's next in this space? Next week is MakerDAO, multicolored DAI that's launching in the same time. What that means is right now you can only use one token, Ether. And now they're going to be voting out what's the next other tokens coming in, but they're going to be adding more to it down the line. And so it's opening up to other possibilities, but each going to have their own cap on it. So it's not, you can borrow whatever you want. Each is going to have, right now it's 100 million for the next one is going to be much less. So it's not, bottomless pit to borrow against. DAI saving rates is also something very interesting. It almost sounds like you took it from our DAI, who are the person who's going to be coming up and talk to you about it later on, is that when your DAI is still sitting around while you lend it out, you can earn even extra money on it. So you get 5% plus, you get extra 1.25 at the moment. So you're almost returning 6% total yields on it, which is amazing. So as you can see, the founder of Maker, Rune Christensen, said it is going to cause explosion, innovation, the creativity. And I tell my banker, investor, trader friends that you should check out this place, because right now it's like a white page. You can start from completely new area, and the possibilities. Run your mind free. Don't be, what can I not do? The possibilities are endless. It just is your mind that going to stop you for right now. Later on could be regulation, but for right now, it's still open to come up with ideas. And I look at what excites me in this space. You have these young kids who used to go to MIT, Oxford, Cambridge, or any of the top schools, used to go to hedge funds and banks. Right now, they're coming to this space, and they come up with this idea. And they're very enthusiastic and have some amazing idea how to get unbanked people on there, how to make it, like Art DAI is one example, because you can give it to money to charities, or you can give it to, either way you can do it. It's an amazing, exploding place that, it feel alive when you get into that. Just before, other thing, Ether future is also going to be very important, that coming on the Chicago Merchant Exchange CME, because then you can start taking, when the futures came on the Bitcoin, that's when the market starts selling off, right? Because now you can start hedging it. So now you can start hedging Ether down the line. I also know that it's not today, but Bitcoin options are opening up in the first quarter next year by CME too. So more product that can protect it, and you can hedge your trades, or DAI or Ether. They're coming on the market also. And its bottom line, the bottom one, Ether 2.0, that's starting rolling out. That is for Ether and the whole ecosystem. It's an enormous big deal, and it's going to take 2 to 3 years, if not longer, to roll out to make it faster, more secure, more trackable, and more scalable, which is everybody complains about. So it's an enormous rollout, and people working on it. You go to these hackathons or Ethereum developer conferences and see how hard these people working, and that's why one of the reasons I feel that Ethereum for today is still one of the top protocols out there, because the community around that is just amazing, and how they work together, and they want to make it to be a much better place. So keep an eye on Ether 2.0 just for the whole ecosystem, whole blockchain and Bitcoin, not Bitcoin, but the blockchain system. It's a major update. So why multi-DAI is so important, and why it's so exciting for the future. So there's a company called Tin Lake. They're working with MakerDAO. And then you can get your real asset, say the house. You can have a non-fungible token, NFT. You can have a government around it, and then you can borrow, go on the platform, on the MakerDAO platform, and then you can borrow against your house. And you don't need to go to the bank, but you know, you need to have like a land registry in Georgia. They have it. So it's on the blockchain, so you can verify it. That's your house. You have to know how much that the house really that costs that much. Then you can go and borrow against it, and you don't need to wait or have any biases. Maybe the banker doesn't like you. Or it's more for the developing countries. But I understand that even in the first world countries, there's long-term issues about waiting for getting your any kind of loans for yourself, even though you have the money. So I think this could be quite revolutionized, and one of the things that's so exciting part in this whole DeFi space. So what I was telling you about the DAI explosion, the whole ecosystem around it, they're just coming up. Here, some of them even, I mean, this is a little bit outdated already, because there's been new DAI thing came out. With every hackathon, there's a new format coming out that is just, just blow your mind away what you can do. So as you can see, our DAI is on there. I think it's going to be on the mainnet now, friend. Is it running now or still coming out? So look, I mean, just look what they're doing. And it's only been for the last, I think, 3 or 4 months. This thing is just take a life of its own. So that's what's keep going back to that. It's amazing what these people can do. Here are all the DeFi places, DeFi resources that you guys can go. I put the bottom one, the DeFi Spain. So if you guys are going to go there, but the English one, the DeFi Telegram in the English one is very active. I literally go there every day. So you guys can better take a picture. You can go on that. I go on it every day, every morning. There's some back and forth because now, that Telegram is very Ethereum centric, but you can also do it on EOS. You can do it, and now you have side chains coming up that you can work. I mean, Rootstock would be nice to come out, but there's another project called Echo out of Belarus that you can start doing smart contract on Bitcoin. So you can open up the Bitcoin for open finance. The guy is Chris Black for the YouTube channel. He's so good to explain very beginners how the whole system works, how does DAI work, how to use MetaMask, how what possibilities does DAI have, how some of these software like front end that UX UI works for InstaDev, which is funded by 2 Indian literally teenagers, and I just got funded for $3 million, and the technology it's crazy what these people can do. So. And DeFi Plus, when you go into DeFi Plus and DeFi Prize, then opens up, they're just in, but they have a lot of lists of projects and all the different things that you can working on. And I think very valuable and to looking at. And for final, these are my information. That's my Telegram group, my LinkedIn, and the Quantifier is the fund I started. I started that fund because I want to offer people who are interested in alternative digital assets to be involved in the blockchain place, but they don't want to take the volatility of the crypto moving up and down rather than to go something stable. You get steady 5% return. I set it up that the back-end side is more traditional financial way. Governance, regulations on the back end, and the front end be investing in new stable coins or market making. So we want to both add to the community and get people in to hopefully through our fund who are interested in investing in this kind of space in a safe, steady 5%, 6% return. So I think that's it.
Okay, I would like to talk more about your crypto Quantifier. We have some minutes to talk about.
Yeah.
So what do you think the fund, the Quantifier fund, that you are going to your knowledge, you are going to put it in a traditional fund like fixed income? You are competing. What is this is the new kind of fixed income or?
Yes, I mean, you can also look at like the new kind of money market.
Money market, yeah.
Yeah, is because you can look at it, you can get to it right away if you want it. We're gonna have maybe minimum 3 months. You can lock it down, give us 30 days or maybe less, and then you can pull out your money anytime. But you can also today you can watch your money grow every day. There's an app in InstaDebt that you can just see the money, all the interest that you earn.
And what do you think the interest rate will evolve in the future? What makes sense? Because probably there are not so many offer in US dollar, crypto US dollar. That's why the interest rate goes very high. But
yeah,
do you think in the long term, what do you think is they are going to compete with the banks?
Well, I think there's always going to be a certain cushion of interest that's going to be there, but it's not in the yield in the real banks because there's no middleman.
Yeah.
But as you can see on the chart that show, because so much interest coming in, when money comes in, it's kind of drive it down. But at the same time, that's the die though. The USDC really didn't budge. So USDC, I mean, if you go to Celsius, even though it's centralized finance, you can get 8% on DAI. Or you can get 8% on USDC. But if something goes wrong, it's their response. You know, it's on their hand.
And what do you think about the global interest rate? Do you think they are going to be like a global interest rate, or not? It's not.
I think that's tough. Even now the politicians cannot come together on so many things. So it seems to me what Binance is doing, that they're going to each country have their set up their own currency, like stablecoin in pounds, euro, whatever, every country they go to, they set up that. I think that's more possibility behind it. Yeah. You cannot get into the major financials. You cannot compete with them. Like you cannot, people upset because Libra was supposed to compete with the dollar. You cannot do that. It's not gonna happen like that. The regulator will shut you down as fast as they can. Okay. But something like that in a developing country, where banking is still not up to speed, not digital. There's a lot of women cannot get a loan, or there's always especially a small town, someone doesn't like you. This is easier way to get your loan out there and borrow against it when you can use it for get a tractor, car, whatever that need the loan for. So I think the possibility is just beginning. That's what I'm saying. It's just beginning.
Okay, thank you so much, Peter, for your
Thank you.
insights.
Thank you for having me again.
And we will follow your crypto.
I hope I didn't talk too fast. I'm sorry. My Spanish is okay.
Okay, so thank you. So next speaker.